Yes, a very good afternoon to all of you. Right, so all of you studying, all fine, very busy right now studying, right, and also waiting for the amendment video, right, waiting that RTP November 20 or what are the amendments, right, the academic updates for the November 20 exams. Okay, right, so in this particular video, we will look into the amendments which are there for the November 20 exams, right, so some 3-4 new amendments which we have over there, right, and in addition to that, the amendments which were there for May 20 exams. Those same amendments have been carried forward for the November 20 exams also, right? So quickly, let's get into the discussion for the amendments for the November 20 exam, right? So the first amendment which we see over there is regarding the definition of a government company, right? So the document which I have opened over here is the RTP November 20, right? Which you can download from the Icai website, right? The definition of a government company. So now, where in our audit syllabus do we come across this government company, right, wherein we talk about the appointment of the company auditor? We say other than government company and the government company, right? Then we talk about the appointment of the subsequent auditor, the appointment of the first auditor, and the appointment of the auditor in case of the casual vacancy, right? So appointment of auditor other than government company and the government company, right? So first we there look into the definition of a government company as per section 2, right, clause 45, right? And what is the definition of government company, which we've always been studying so far, in which a government company is the company in which not less than 51% of the paid up share capital is held by the central government, state government, partly by central or state government, and which is a subsidiary of a government company. And this is the definition of government company we know about. Yes, in which not less than 51% of the paid up share capital is held by the central government, state government, or partly by the central or state government, or which is a subsidiary of a government company. Now, what is the amendment over there? It says not less than 51% of the total voting power. Right, so now no saying paid up share capital over there. You have to consider it to be the total voting power. And a total voting power, because there could be some differential voting right shares also. No, generally it is one share, one vote, but there could be some differential voting right shares where it could be one share, two votes up to 10 votes, which are called as the superior right shares, and the superiority is with respect to the voting. Right, so that's the change in the definition in case of the government company, in which not less than 51% of the total voting power, right? So this particular question say expected in the right MCQ or so, right? So that's the first amendment over there. Second one, right, it is regarding the section 143 subsection 3 of the Companies Act, right? 143.3, the duty as to reporting, right? Reporting on other legal regulatory requirement. Right, in our audit report of SA 700, right, we have the title, addressee, opinion, basis for opinion, going concern, key audit matters, right, if any, then management's responsibility, auditor's responsibility, and then the other reporting responsibilities, right, reporting on other legal regulatory requirement. So one where we say 143.11 matters have been reported as an annexure to the audit report, that is the CARO matters. And by the way, which CARO is applicable for your November 20 exams? Right, for the November 20 exams, which CARO is applicable? The CARO 2016 is applicable for the November 20 exams. Right, the CARO 2016 is applicable for the November 20 exams. Right, is it clear to everyone? Okay, right. So now again coming back to that reporting on other legal regulatory requirements. So one, you make a reference of 143.11, and okay, those matters have been reported as an annexure to the audit report. And then 143.3. And the 10 points of reporting over there, whether we've obtained the information explanation, then the proper books of account, balance, yes, whether the branches which have been audited by the branch auditor, his report has been forwarded to the company auditor, whether balance sheet, profit and loss account are in agreement with the books of account, whether financial statements comply with the AS, any observations or comments which have an adverse effect on the functioning of the company, whether any directors are disqualified under 160 164(2), right? Any observations or comments which have an adverse effect, yes, which any adverse findings regarding the maintenance of account, whether the company is having the adequate IFC, internal financial control, and also the operating effectiveness of such control, and such other matters as may be prescribed. This is what is already there, and it is there as it is. What is now added over there, can now auditor of a company under 143.3, you are also required to do the reporting that whether managerial remuneration which has been paid to the directors, whether it is in compliance with the provisions of section 197 subsection 16, or whether any excess managerial remuneration has been paid, right, in excess of the limit laid down under this section. Right, so managerial remuneration, whether paid within the limit or does it exceed the limit, now that also comes under the reporting under other legal regulatory requirement. Right, so reporting under 143.3. Right, makes a statement as to whether the remuneration paid by the company to its directors is in accordance with the provisions of this section. So section 197 read with schedule 5. And this we also have it in the clause 11 of CARO 2016, which is regarding the managerial remuneration. And whether managerial remuneration has been paid or provided for in accordance with the provisions of section 197 read with schedule 5 to the Companies Act. If not, then state the amount involved and the steps taken by the company for securing refund of the same. And so in CARO 2016 it is there in clause 11, but now in CARO 20, later on, okay, so if you see CARO 20, right, the later on CARO which has come, there is no managerial remuneration clause. Why there is no managerial remuneration clause over there? Because it is said that now it is coming under reporting of 143, so no need to report it under CARO. It becomes overlapping of reporting, not double reporting. Right, so there in CARO 16, but managerial remuneration not therein is no reporting required under CARO 20. Right, so this is a matter which is now added under 143. Right, whether remuneration paid to any director is in excess of the limit laid down under this section, and give such details as may be prescribed. Right, so anyway, section 197 itself is applicable only to the public companies, not applicable to the private companies. So in case of private companies, you need not do this reporting under 143.3. Right, so managerial remuneration paid, whether it is in accordance with the provisions of this section, and whether any excess and in excess of the limit has been paid, is now required to be reported under 143. Okay, right, next one, right, so coming to the third amendment over there, which is regarding the section 132. Right, what is section 132? It is regarding the NFRA, right, the National Financial Reporting Authority. Right, the National Financial Reporting Authority. Right, so this is again one of the things which has not come entirely in the November 20, but it has come just in the past few attempts. Right, regarding the NFRA, right, the constitution of the NFRA, the functions of the NFRA, right, the applicability of the NFRA. Right, so in those existing provisions, they have made a few changes over there. Right, so whatever functions are required to be performed by the NFRA, right, to make recommendations to CG regarding accounting auditing standards, right, to monitor and enforce compliance with accounting auditing standards, to make measures for improvement, to monitor, right, so all those, the functions of the NFRA would be performed by such divisions as may be prescribed. So it says a separate division of NFRA would be constituted through which it will perform its function. So that is one subsection which has been added over there, right, regarding the NFRA. Right, then every auditor, right, so one, after the appointment of the auditor, the company is required to file form ADT1 with the ROC. And after appointment of auditor, the company has to file form ADT1 with the ROC. But here it says every auditor referred to in this rule 3, right, we'll see the applicability of NFRA, shall file a return with the NFRA. So now auditor has to file a return with the NFRA on or before 30th of November in form NFRA 2. Earlier this 30th of November was 30th of April. Now that 30th of April not there, that has been replaced with 30th of November. Every year, and in which form? In form NFRA 2. Right, so this could again be a multiple choice question in your exam. right? Every auditor who is required to file it, auditor, right, has to file a return with whom? With the NFRA. By what date? On or before 30th of November every year. And what is the form? Form NFRA 2. Right, so instead of 30th of April, now it is 30th of November. Okay, right. And then, we also have in the section 132 the study regarding the applicability of NFRA. Okay, which are the companies, which are the audit firms, which are the auditors which will come under the purview of the NFRA, which will come under the purview of the NFRA. And recently the NFRA has passed an order against one of the auditors in the ILFS case. Right, so recently, right, 22nd of July 2020, the NFRA, right, the order under section 132(4), right, so we are discussing right now the amendments under section 132 only, right, of the Companies Act in respect of the show cause notice issued to the right member of the institute. Okay, so now if you go through these 88-page order which has been passed by the NFRA, right, just out of seeing the practical aspect of things, you'll see, oh, there are so many standards on auditing reference has been mentioned. They've mentioned over there about the engagement partner, the engagement quality control review, the risk of material misstatement, going concern. So all that we discuss in the standards on auditing, right, and also SQC1, right, and then also a lot of clauses of ethics have been put over there, and saying that fails to disclose a material fact which is there under clause 5 part 1 second schedule, fails to report a material misstatement which is there under clause 6 part 1 again second schedule, and then gross negligence or does not exercise due diligence in the conduct of professional duties, right, so that is clause 7 part 1 second schedule. And also 812, what is 812? Fails to obtain a sufficient information for expression of opinion, right. Then also 912, that say fails to invite attention to departure from the generally accepted audit procedures, right. So under all those clauses of ethics, they found the member to be guilty of professional misconduct. Okay, right. So if we just have an overview, of what is being said over here, right. Obviously, we are not going to go into the details. Right, then they are saying section 144 also, auditor not to render certain services as per section 144. We say statutory auditor, he cannot render certain services to company, holding company and subsidiary company, right. So here it seems some non-audit services were also provided by the auditor, and some non-audit services were also provided by the auditor, right. So 132, the expression professional or other misconduct shall have the same meaning as under the Chartered Accountants Act. Okay, right. So they have given the details first to begin with. So now over here, right, fails to disclose 5, fails to disclose a material fact, right. Then 612, what I was just saying, fails to report a material misstatement. 712, does not exercise due diligence or is grossly negligent. 812, fails to obtain a sufficient information. 912, fails to invite attention to any material departure. And so whatever we study in our CA final audit syllabus is not that it is altogether theoretical, rather it is most practical. And when studying, it looks like it is theory, but it has a lot. And now these documents, okay, immediately they make more sense to oh yes, does not exercise due diligence, ethics chapter, obviously would have studied it by now, right? So you'll find it very familiar. Okay, right. So, right, does not exercise due diligence under clause 7, right, a key assertion that has been made. Then 230, audit documentation has not been properly maintained, that is why gross negligence. Then they've gone to 230, the nature and purpose of audit documentation, right. So lot of effort also goes in the creating any charge against and passing such an order, right. So what does it mean to ensure that due compliance, due diligence, that auditor has not exercised due diligence, right, how the duty should be discharged by the auditor, right. So negligence, so the entire discussion over there regarding the negligence, right. Then replies to the articles of charges, right. So they said that these are the guilty. Then the the rounds of discussion which happened between the two, right. Then now they are talking about the engagement partner, fail to examine the independence requirement as provided in 200, right, and fail to exercise due diligence for the check of independence requirement on providing prohibited services mentioned under section 144, right, does not exercise due diligence, right? So professional negligence over there, right? Then management services, right? Code of ethics, right? Talking about the threats to the independence of the auditor, right? So we'll just quickly scan through, come towards the end of the document. Probably I just would like to show you a few more points over there. And a non-audit services that I've already told you, 144, auditor not to render certain services. Then EQCR, and SA 220, engagement partner. And a EQCR, listed entity audit EQCR compulsory, and others it is left at the discretion of the firm. So yes, it has completely failed in documenting its working properly, right? And separated from the work of the audit team as required by SQC 1 and SA 230. EQCR team failed to prepare documentation. EQCR team failed to review multiple audit working paper, failed to adhere to the requirement of SA 220. Overall, the engagement was performed by the engagement partner in violation of several provisions of the standards on auditing, including those contained in 200, 220, 30, 40, 50, 60, right? 315, 570, 580, 700. Also violated the provisions of the Companies Act, SQC 1, Code of Ethics, and RBI regulations as well. Right? Huge gap in audit procedures. AS could sign an unmodified audit report, right? Saying that reasonable assurance that financial statements are free from material misstatement. Right? So it says unmodified opinion was not right in that case, and it fails to disclose a material fact, fails to report a material misstatement. Right? So it's a very big eye opener that, oh, whatever we are discussing and a ma'am is teaching, or wherever you've done the classes or done self-study also, and we talk about SA 220, quality control, SA 230, audit documentation. So you just can't take them at the face value. Right? There is much more substance to it. Right? So practically also when you are doing the audits, right? So any documentary evidences, professional misconduct, right? Is RBI regulations which have not been complied with, right? And then say, let's come towards the end of the document. And considering all the above factors, right? So you just go on the internet and you'll be easily able to find this document, right? So you can have a look at it later, right? So considering the above, all the above factors, NFRA makes the following order in terms of 132 4C of the Companies Act 2013. And what is the order passed by the NFRA? A monetary penalty of 25 lakh rupees is levied. And in addition to that, debarred for a period of 7 years from being appointed as an auditor, internal auditor, or undertaking any audit in respect of financial statements or internal audit of the functions and activities of any company or body corporate. Right? So one, monetary penalty of 25 lakh, and second, debarred for a period of 7 years from being appointed as an auditor, internal auditor, or undertaking any audit in respect of financial statements or internal audit of the functions and activities of any company or body corporate, right? So debarred for a period of 7 years, right? So this is where we are seeing the practical application of the provisions of section 132 subsection 4 and clause C over there. Okay, now let's come back to the amendments that we are discussing, right? So I'll come to the third point over there, but as I just showed you the NFRA order, first I would now prefer to come to the, right, the fourth point over there for the NFRA, punishment in case of non-compliance, right? I hope all of you are listening to me, right? If a company or any officer of a company or an auditor or any other person, so company, officer or auditor or any other person contravenes any of the provisions of the NFRA rule, the company and every officer who is in default or the auditor or such other person shall be punishable as per the provisions of section 450, right? And now they've specifically added under, so section 450, that is one charge over there. And second, further as per section 132(4) of the Companies Act as amended by the Companies Amendment Act 2019, NFRA, where professional or other misconduct is proved, right now we saw that both of these misconduct were proved in that NFRA order. NFRA have the power to make order for imposing penalty not less than 1 lakh rupee, and in case if it's an individual doing the audit, then which can exceed up to 5 times the fee received, right? So not less than 1 lakh rupee, which may extend to 5 times of the fees received in case of individual, and not less than 5 lakh rupees. So 1 lakh rupee in case of individual and 5 lakh in case of the firm, but which may extend to 10 times of the fees received in case of the firm. Right, so minimum 1 lakh, which may extend up to 5 times of the fees received. So if the audit fee received by your firm is say by the individual is say 1 crore, right, then the penalty which could be put by NFRA could be up to 5 crore. Right, if the fee received by the firm is say 1 crore, then the penalty could be up to 10 crore. Right, so 10 times in case of firm and 5 times in case of the individual. Right, so very important over there. Right, and what is the minimum? Not less than 1 lakh rupee, and you're not less than 5 lakh rupees in case of the firms, and in case of individual not less than 1 lakh rupee. Right, is it clear to everyone? Yes, imposing penalty of not less than 1 lakh rupee, 1 lakh which may extend up to 5 times of the fees received, and so audit fee received in case of individual, and not less than 5 lakh rupees, but which may extend to 10 times of the fees received in case of the firm. So that is one, the penalty part. Right, and second one, debarring the member. So in case of this NFRA, right, over here, what was the penalty over here? 25 lakh rupees. No, 25 lakh rupees, but here it says individual 1 lakh, not less than 1 lakh, and firm not less than 5 lakh, right, and up to 5 times and up to 10 times, right, of the fees received. Okay, and second, debarring the member or the firm from being appointed as an auditor, internal auditor, or undertaking any audit in respect of financial statements or internal audit of the functions and activities of any company or body corporate. Did we see the very similar wordings over here? Right, did we see the same wordings over here? Auditor, internal auditor, or undertaking any audit in respect of financial statement or internal audit of the functions and activities of any company or body corporate. Here it says for a period of 7 years. Right, so here the order has been passed for 7 years. Right, so cannot be appointed as an auditor, internal auditor, or perform any valuation as provided under section 247. Right, so now cannot be appointed as auditor, internal auditor, or performing any valuation for a minimum period of 6 months. For a minimum period of 6 months, or such higher period not exceeding 10 years. Right, so in that NFRA order it is 7 years. Right, but what is the range? 6 months to 10 years. Right, as may be determined by the NFRA. Right, as may be determined by the NFRA. Right, so penalty and also debarring the member, and debarring the member or the firm. So the entire firm could also be debarred. Right, so either the member or the firm. Right, what does it say? No audit, no internal audit, or not providing any valuation for a minimum period of 6 months, right, and which may extend up to 10 years. Right, so this is by the NFRA. In addition to this, the disciplinary committee of Icai would also take some action against that member. And also it's under the second schedule. So there it could be, remove the name of the member permanently or for any period, or also impose a fine of up to rupees 5 lakh. But that is under the Chartered Accountants Act by the disciplinary committee. Right, here it is by the NFRA. Okay, right, then we also have one more provision which is regarding the applicability of NFRA, and okay, which companies, which body corporate, which auditors come under the purview of come under the lens or the radar of the NFRA. Right, so whenever, anywhere, any list is made, first to stand in the line is the listed company. And whenever any list is being made, which is the first entity to be over there? Listed company. Right, so these are, say, the highlights for November 20. Right, so if you have so whatever is there in that RTP November 20, the academic updates, those same I have incorporated over here and a little bit more. So those of you who would like to download this can go to rtlahoti.com. Here you have the free resources. Right, you can register over there, and then you can right? Just download this particular amendments from there, right? So I hope it is clear for everyone. So generally students have a question from where do I get the amendment notes which are discussed in the class. So I've showed you that here where the free resources icon is there, you can get it from there, right? And you probably also would have seen about the mind map book which has been like the ebook for mind map which has been released lately, right? So a little bit I'll also be mentioning about the mind map also. Okay, right, but before we come to the mind maps also, let us come to the discussion regarding this NFRA, correct? Conclude with the discussion regarding NFRA, right? So which are the classes of companies to which NFRA provisions are applicable? One, as I told you, listed entities, and on any stock exchange, whether in India or outside India, right? Listed on any stock exchange in India or outside India. After listed companies, you always have the unlisted public company having paid up share capital of more than or equal to 500 crore, or having a turnover of more than or equal to 1000 crore, or having the loan debenture deposit of more than or equal to 500 crore, right? So 500 crore, 1000 crore, 500 crore. Right, then the three best friends, insurance company, banking company, and the electricity supply company. And applicability of NFRA, right? Listed entity, then unlisted public companies, 500, 1000, 500. Then these three best friends, insurance, banking, and the companies engaged in the supply of electricity. Now this red color over here, that is the amendment. And the red color which is over there, that is the amendment, right, which is there in the academic updates over here, right? So this is what has been added over there, right, which is put in red color in this particular chart, right? So now it says that banking company also includes the corresponding new bank, and it also includes the subsidiary bank, right? So recently there has been an amendment in the Banking Company Acquisition and Transfer of Undertaking Act, wherein now it says included in the column 2, right, the corresponding new bank is also included in the definition of a banking company. It also falls under the definition of banking company, right, category of a banking company, right? So corresponding new bank and also the subsidiary bank, it says both these are also to be considered, right? Banking company includes corresponding new bank as defined under the clause, right, and also the subsidiary bank as defined under the State Bank of India Subsidiary Bank Act 1959, right? So again, this could be expected in your multiple choice question, right? So that's the amendment over there. Okay, banking company, insurance company, electricity supply companies, they come under the purview of NFRA. But now banking company also includes the corresponding new bank as well as the subsidiary bank. Right, and then it says any other body, corporate or person where the central government thinks, right, in public interest that it should come under the purview of NFRA. Right, so any body, corporate, company or person, or any classes of body, corporate, company or person on a reference made to the NFRA by the CG in public interest. So central government thinks that these companies should also come under the lens of NFRA. It's in public interest. Even those will be covered by NFRA. And the last one, right? So we have A, B, C, D over here. No, listed company, unlisted public company, 500, 1000, 500. Then banking, insurance, electricity supply. And then we have those where references made to the NFRA by the central government in public interest. Right. So any subsidiary or associate of the above four, A, B, C, D, any subsidiary or associate of the above four, which is registered, incorporated outside India, if it contributes more than 20% of the consolidated income or the consolidated net worth of the entities referred to in A to the above. Right, so say this banking company, it is having a subsidiary outside India, right, and that subsidiary outside India is contributing to more than 20% of the consolidated income or the consolidated net worth, then that subsidiary outside India will also come under the purview of the NFRA, right? So 20% is the crucial number over there. Right, a body, corporate, incorporated or registered outside India, which is a subsidiary or an associate company of the companies referred to in A to D above, if it exceeds 20%, right, of the consolidated income or the consolidated net worth of such company or body corporate as the case may be, right? So that's the applicability of the NFRA, right? And then I've told you that this 30th April has now become the 30th November. And earlier it was the 30th April. Now it has been replaced by 30th of November. And rest the functions of the NFRA and all that continue to be the same. And this punishment also I've already discussed with you, the punishment in case of non-compliance. Right? So what is the penalty? And also debarring the member or the firm from not less than 6 months, which may extend up to 10 years. Right? Is it clear to everyone? Yes, is it clear to everyone? Okay, right. So these are the main academic updates as such, which are purely there only for which have come in only in the November 20 attempt, right? Government company 143, and then regarding the NFRA, and then this audit committee corporate governance, which is regarding the chapter of the SEBI LODR. The SEBI listing obligation and disclosure requirement regulation, and the second one, which is regarding the networks, right? The networking in the chapter of professional ethics, right? Can now CA firms, you can constitute a network, you can register a network with the Icai. These two amendments were also there for the May 20 exams. And these two, the SEBI LODR regarding the resignation of the statutory auditor and the networking by the CA firm, these two amendments were also there in the RTP May 2020. Right? So if you go on the right where you are seeing this video, yes, you please go to the other videos on this particular channel. You will also find over there the RTP May 20 amendments, part 1 and part 2, right? So one of them talks about the SEBI LODR and the other one talks about the networking, right? So these two amendments are like the carry forward and the brought forward from May 20 to November 20. Right? Is it clear to everyone? Right? So what is the interesting part over here? Just if we take an overview or a revision of this amendment over there regarding SEBI LODR, it says auditor of listed company wants to resign. Auditor of listed company, he says, there is no cooperation by the management, there is non-availability of information, and now he wants to resign. But if he wants to resign, it says all of a sudden you just can't get up and walk away. They've put some restrictions now on the resignation of the auditor. So does it mean that he cannot resign? No, he can very much resign. But now there are some conditions associated with the resignation. Okay, so what does it say? If auditor resigns and a listed entity auditor resigns within 24 hours of the receipt of the reasons from the auditor regarding his resignation, these reasons are to be submitted. The detailed reasons for the reasons of resignation of the statutory auditor are to be submitted by the listed entity to the stock exchange. Right, so that's a very important one over there. Right, so detailed reasons to be disclosed by the listed entity to the stock exchange in case of resignation of the auditor of the listed entity as soon as possible, but not later than 24 hours of the receipt of such reasons from the auditor. Right, so once the auditor has sent the reasons to the company, the listed entity within 24 hours have to give the detailed reason to the stock exchanges regarding the resignation of the auditor, right? Why does the auditor resign? The detailed reasons for the same. Okay, right. Then regarding this resignation of auditor, right? So we know that there are these 4 quarters in a financial year, right? You have the June, September, December and March quarter. June, September, December and March. Okay, it could happen in any of the quarter, but say I am just taking the example of the September quarter. September, so 30th June, 30th September, 31st December and 31st of March. I am taking example say of the 30th September quarter. And now say the auditor of the listed entity has resigned on 10th of November, just as an example. The auditor of the listed entity has resigned on the listed entity or material subsidiary auditor has resigned on say 10th of November. Okay, so now when did the quarter before 10th of November just get over? 30th of September. So October full month and November 30 days. November 10 days, right? So October 31 days and November 10 days. So 31 plus 10, 41 days. So has the auditor resigned within 45 days from the end of the quarter of the financial year? Has the auditor resigned within 45 days from the end of the quarter of the financial year? Yes, he is resigned for after within 40, no, he is resigned on the 41st day only, not 45 days also. So within 45 days. Then what does the SEBI LODR say? That before such a resignation, he has to submit, issue the limited review or the audit report for such quarter. So before you resign auditor, 30th September ka either limited review or audit report you have to issue, and then you can resign, right, before such resignation. Right, is it clear to everyone? Right, so once he resigns, before such resignation, issue the limited review or the audit report for such quarter. Okay, so it depends whether the listed entity is getting a quarterly review done or a quarterly audit done. So if they are getting a quarterly review done, right, then following the SRE, so the limited review conclusion, right, and getting an audit done, then following the standards on auditing. Okay, now say let's take the example that the auditor resigns on say 10th of December. Right, so again, what is the quarter which just got over before that? Again, 30th of September only. So now October full month, November full month, and then December 10 days. So is it more than 45 days from the end of the quarter? Is it more than 45 days after the end of the quarter? Yes. So now it says before such resignation, issue the limited review, the audit report for such quarter as well as the next quarter. So now auditor, before resigning, before the resignation, you have to complete the audit or the limited review for the September quarter as well as for the December quarter. And for the September quarter as well as for the December quarter. Okay. And notwithstanding the above two, and notwithstanding what I discussed in within 45 days and after 45 days, if the auditor has done the audit or the limited review for the first 3 quarters of the financial year, and an auditor has signed the limited review audit report for the first 3 quarters of the financial year. So June, September, December, he has already done the LR or the audit. Then if he resigns, before such resignation, and so before he resigns, issue the limited review audit report for the last quarter. Right, so LR or audit report for the last quarter and also the audit report for the such financial year. Right, so for March quarter, limited review or audit report, and for full year, 1st April to 31st of March, the audit report. And so that is what I said. Now all of a sudden auditor, you can't get up and walk away. And there are some restrictions now put on the auditor over here. And some restrictions put on the auditor over here within 45 days, after 45 days, and after completing the limited review or the audit report for the first 3 quarters. Right, September is just an example. Say if he resigns, on 10th of July or 10th of August, then what is the quarter which just got over before that? Say that is 30th of June. So accordingly, you need to apply the provisions. Okay, right, and others, you can obviously go to the RTP May 20 amendment video and you'll find the detailed discussion of each and every point over there. Right now I just took the main content over there, but if you go to that particular video over there, you'll find the entire content. Right, and then the second one is, which is also there in the RTP May 20, is regarding the registration of the network with the Icai. Right, so now CA and CA firms, they can form a network. And so each firm is having its own expertise. One is good with tax audit, another good with mergers and acquisition, say another good with statutory audit, right? So they can come together and form a network, right? So this network is to be registered with the Icai, right? So required to be registered with Icai. First, you have to get the name of the network approved from Icai. So, if it's a firm or an individual, then we say and company and associates. But now you want to distinguish and practice, a firm or an individual from a network. No. So after the name of the network, you won't find and company or and associate. You will find the and affiliates. Right. What you'll find after the name of the network is the word and affiliates. Right, and affiliates. Okay, right, and then very important over there is the definition of a network. Right, very important part of the discussion over there is regarding the definition of a network. Right, so network, it says, is a larger structure, obviously. And it's a bigger, it's a wider than an individual CA or a CA firm. It's a larger structure. And what is the first golden rule for the constitution of the network? Aimed at cooperation. And of the people, by the people, for the people. So of the CA, by the CA, for the CA, that type. That is aimed at cooperation. And in addition to cooperation, it is clearly aimed at profit or cost sharing. Say point number 1. Right. Then it shares common ownership, control or management. Say point number 2. Right. Common quality control policies and procedures. Right. So say that could be point number 3. Right, then common business strategy, that is point number 4. Use of a common brand name, that is point number 5. Or a significant part of the professional resources, that is point number 6. And what is the one thumb rule, the golden rule? That is aimed at cooperation. And aimed at cooperation. And in addition to that, it could be a combination of any one of these. More than one, wonderful, but at least one of these. That is, aimed at cooperation and aimed at profit or cost sharing. Aimed at cooperation or shares common management, ownership or control. Aimed at cooperation and common quality control policies and procedures. Aimed at cooperation and common business strategy. Aimed at cooperation, use of a common brand name. Aimed at cooperation and also shares a significant part of the professional resources. So along with 1, you can have 1, 1, and a 1, 2, 1, 3, 1, 4, 1, 5, 1, 6. Any of these combinations you can create over there. Right? So that is what they've explained over here in the concept of the network. And that is what is explained over here in the concept of the network. Right? If you see, aimed at cooperation, right, and aimed at profit or cost sharing, deemed to be a network. So what combination I said this is? 1, 1. Right. Then aimed at cooperation and shares common ownership, management, control, again deemed to be a network. So 1, 2. Then aimed at cooperation and common quality control policies and procedures, deemed to be a network. So this is 1, 3. Right, aimed at cooperation and common business strategy, so that is 1, 4, again deemed to be a network. Then aimed at cooperation and use of a common brand name, 1, 5, again deemed to be a network. I hope all of you are getting this. Right, and again aimed at cooperation and also shares a significant part of professional resources, deemed to be a network, that is 1, 6. Right, so that's the detailed understanding regarding the concept of the network. But the most important part over there is that you should be knowing the definition of a network. Right, basis that you can very easily understand the concept of a network. And then they are talking about the forms of the networks, the name of the network. What did I say? Affiliate. And so AB an affiliate, AB affiliate LLP, AB affiliate private limited or limited, whatever. Right, but affiliate, right, not associate or company. And affiliate is what is to be used after the name of the network. Okay, right, so that is regarding the amendments. Okay, so you might have realized by now, right, that you have studied, you've done your first study, you've done your classes for audit, you've done some revision also, you've prepared some notes also, but still that confidence is still a matter of nervousness only. And you open the book again and then you say, I remember, but I don't remember. I don't remember, but I remember. And so that type of a dilemma, that type of a tug of war with yourself will continue right up to the day of exam. Right, so as I always say in my classes, right now if you're feeling nervous, if you think how this is going to be possible, then you are absolutely normal. And so if you are little, not too much of it, but little, you're getting a little bit nervous regarding the exam or so, that's normal. And that's not something which is not expected. Rather, it's a very I could call it as, it's very symptomatic of being a CA student. And so there nowadays they talk a lot about symptomatic and asymptomatic, no? Right, so these are the symptoms of being a CA final student or so. But certainly audit is a subject which requires multiple revision, right? That is the key, one of the important key, and the other important key, I hope you also know about that, is the writing practice, right? So one, you should understand, remember, retain, revise that all. And second, whatever you understood, whatever you remember, all that you should be able to write. Your presentation, content, all in the paper has to be up to the mark. What you write in the paper, content wise, presentation wise, it all has to be correct, right? So with this, with my experience of being teaching the subject over a period of time, it was since it was on the back of my mind since some time to prepare a chart book for audit. So chart book, so then I came across this concept of mind map, which is also a type of chart only, right? So but it is a chart which has got some words also written in it and the correlated images also, which makes the study of the subject more interesting. Okay, but then still students have a question, okay, no ma'am, but still what exactly mind map, how does it look like? Okay, right, so how does it look like? Then say probably this is something what it looks like. And also say this is regarding the NBFC audit reporter direction, right? So in case of all NBFCs not accepting deposits, then the specific advice, exception report to RBI, right? So a very good way for you to revise the subject and to, remember, recall the important points. Rather, if you look at the tagline of the book itself, it says that revise more, retain more. And a CA final audit mind maps, revise more, retain more. Okay, I give a disclaimer over here only that this book is not the one which you need to use it for your main study. And a main study for the subject has to be done from big fat books. You have to be doing it like, from, fat books type of, or whatever main theory book which you are following for the preparation of the subject. This is purely for revision purpose, for revising one day before the exam. Okay, so already many students, I have received a lot of reviews from the students that they are finding the book to be very helpful and very, right, it's helping them in revision of the subject also. Also, there are many students who are saying that, madam, if the hard copy of it could be available or so, but the charts, they are of very different size. So right now it's being a little bit of challenge, to, yes, though we are working upon it to get a hard copy of it also, but I think by that time I hope that you become a chartered accountant before that. I wish and I know that is going to happen, right? So yes, so hard copy is more comfortable. Even I agree for that matter, that ma'am, we can do our own marking, we can write something on our own or so. But I can tell you two advantages of this encrypted ebook. One, you can zoom in the page. You can zoom in the page, you can check one particular area, one particular point. That is an advantage, right? And again, if you look at the price of the book right now, right? So when I'm making this particular video, that time the price of the book is $2.99, right? So this price, such a competitive price, is possible only because it is in the ebook form. Right, so would not have been possible had it been in the, right, what you say, the physical form, and that too, this has to be a color book, and then again the courier charges and all. So I know that in case if you have to study, you would have bought that also, but right now it is only available in the PDF form, right? The encrypted PDF. After you buy the encrypted PDF also, there is no print option. So students have been writing mail, okay, can I print it after I buy it? So no, even after that you cannot print it. Okay, but not that, because it is the book which I have designed and prepared. So I to say I have put in so much of effort in the preparation of this book that I can write a book regarding how I have prepared the mind map book. So many rounds of iteration, putting the syllabus and then into content over there, and then doing the, selecting the correct images and putting it all. But, all the efforts, the result, the fruits of the effort will be only when you find it beneficial for your exam. If you find it beneficial for your revision. Otherwise, though, there is no, usage or value as such of those efforts. But, it's thanks to the COVID time that I could get, right, that particular window, yes, wherein I could work on such a book. Okay, right. So maybe if I could show you a few others, like say this is external confirmation. So obviously many of the mind maps have been broken into more than one. So this is 1.2. So there is also the 1.1 for SA 505 external confirmation. Right. So it's like, you've studied that flow chart. Now it's a graphic presentation of each part of the entity's control system. It gives you a bird eye view type and a concise way. So this is also like a concise way to revise. Right. So if you look at 560, where you have that very challenging part, facts that become a little bit of complicated part. Okay, facts which become known to the auditor after the date of the audit report and before the financial statements are issued and after the financial statements are issued. And some sort of what do you say, interest in the subject also gets developed, wherein you see this emoji, determine how management intends to address the matter. So now you determine. And okay, how the management has looked into. So, it even uplifts, so obviously not only for the entertainment, our main purpose is study, but something related to the study of the subject. So it's interesting. And a carry out audit procedure. So you see, these auditors, they are all together carrying out some audit procedure. And then emphasis of matter paragraph, modify the opinion, right? Then audit report, right? So different. Right now, auditor will seek to prevent reliance on the future reliance on audit report. So auditor says, I will no longer place reliance on the audit report. And a management does not amend the financial statements. Right? So, right, this is it what I wanted to tell from my side. Ultimately, it is you hook or by crook. It's not that if you study from this book only you can revise. You can revise anyway. So that is an absolute truth, which I don't deny. But yes, this book should be beneficial, is beneficial for you to prepare for the exams. Right, and also the RTP November 20, the MCQ, the multiple choice questions which have come over there, I will be uploading a video for that also on YouTube. And I hope that all of you have also seen these CA final audit Icai MCQ discussion. There is a series of around some 10-12 videos over there, right? Some 12 videos over there, right? So which covers a lot of, covers all rather the Icai MCQs which have been released so far. Right, so many students have found these to be very beneficial, for doing the preparation for the MCQ part of the paper. Right, so right, this is all what I wanted to tell you from my side. Right, so I wish you all the very best for your upcoming exams. Right, and I'm also waiting for a success mail from all of you. Right, that I have become a chartered accountant, I've cleared my group 1 and so. Right, I'm waiting. Right, for those mails. Right, so my email ID, I am sure you all might be knowing that. Right, Aarti N Lahoti. Right, Aarti N Lahoti number 9 @gmail.com. Right, @gmail.com. Okay, right, so thank you so much.